We got to talk about copper. That's the only thing we need to talk about. Crash in copper down 24% in 2 days. What in the world is going on? And where are the chances in this crazy copper crash? Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. All right, so before we talk about copper, some housekeeping. We got the end of the month, so this weekend I'll do a special video going through all the big commodities with the new monthly candle, and we're going to talk about what is going on with the commodity sector. Why are the commodities not performing? What is the situation? What is the overall trend look like? Is the commodity really over already? What's going on? You'll find out this weekend. So if you're not subscribed to the channel, hit the subscribe button real quick so you don't miss that video. Now, let's talk about copper. Look at this chart. Boy, oh boy, you see something like this very rarely in a big commodity like copper. As a matter of fact, the last time we saw something similar in the commodity sector was in February, March 2022 in nickel, exactly on the other side. There you may remember the nickel price exploded because a hedge fund blew up that was short nickel. And then when the Europeans started to bring out the first sanction packages against Russia, after Russia invaded the Ukraine, nickel price went up, the hedge fund blew up, short positions got liquidated, nickel price shot up, and then it corrected massively because this was an artificial event, and everything went back to normal. We have something similar here in copper. To explain to you the situation, what happened in copper, let me take you to the year 2015 and to the currency sector. I'm not sure how many of you were in the currency markets back then. I had a front row seat for this one, and it was the Swiss franc. So let me tell you what happened there, because that's important to understand what just happened in copper. So there was a trade going on for about 4 years in the currency markets from 2011 to 2015. So we had the financial crisis. After the financial crisis, the euro was quite weak. We had the crisis in Greece, right, where Greece almost defaulted. We had the so-called PIGS countries, Portugal, Italy, Ireland, Greece. All economies were weak, the euro was weak, and the Swiss were worried that the Swiss franc, the national currency of Switzerland, would get too strong against this weak euro, which would then hinder the export industry. So in 2011, the Swiss central bank came out and basically announced that they would put in an underlying bottom in the Swiss franc against the euro, where 1 euro would never be worth less than 1.20 Swiss franc. Idea being, they wanted to prevent the Swiss franc from gaining strength. So that was a trade that worked really well for some hedge funds for a while, right? Because every time the Swiss franc would hit 120 or shortly dip below it, they would buy up the euro, because they knew that the Swiss central bank would come out, would start buying euro. And if you did it with enough leverage, you could make a nice profit. Your risk was basically limited because the Swiss National Bank had said 1 euro, 1.20 Swiss franc. That's what we're going to defend. Well, in 2015, the pressure got so big on the Swiss economy and the Swiss franc that out of the blue, the Swiss National Bank said, well, we're not doing this anymore. It caught hedge funds by surprise. It blew up the trade. Basically, the Swiss franc collapsed minus 30% in seconds because all these hedge funds got liquidated. I had a first row seat. I had a colleague I was working with who was doing this trade, got completely blown up, flamethrower to the face. I knew a guy from a German hedge fund, whole book burned down. So that's what happened. 2015, out of the blue, Swiss National Bank said, we're not doing this anymore. A whole trade collapsed within seconds. Almost the exact same thing happened here in the copper market. So when Trump came out and said 50% tariff on copper, clearly hedge funds came out and said, okay, even if it's only 30% or 20% in the end, copper will not fall below a certain level, because then the companies will start buying copper because that's the best price they can get if that tariff is put into place. It was probably something around $5, $4.95 a pound. I don't know that for sure. I wasn't in the rooms, but that's what I would think. Why would I think this? Well, that was kind of the price where we were right here before the Trump announcement came. So clearly, this price range right here is something where the hedge fund said, well, we're not going to go back here because this was before the tariffs came. So even if it's only 10%, right, tariff, then we'll be somewhere in this range. So if we ever get down here, obviously, all the companies are going to buy up all the copper they can find. That's going to protect the copper price. So that's going to limit our risk. So we have an asymmetrical trade, meaning our downside is limited, and then our upside theoretically is unlimited. I mean, copper's not going to go to the moon, but if you leverage up enough, even a small move in copper will make you a lot of money. And that's exactly, clearly, what a lot of big hedge funds did. Well, they learned a valuable lesson, and that is, it's not a good idea to put on a trade, especially a leverage trade, on Trump announcements. So, yesterday, the Trump government came out and said, well, we're going to do the tariffs on copper-related products, but not on copper itself, which makes sense because the US doesn't produce enough copper to sustain its own economy. It imports around 50% of the copper. So they're shooting themselves in the foot if they would do, say, 50% tariffs on copper. The prices from cars to infrastructure products to everything, coppers and everything, would go up dramatically. Inflation would go up dramatically in the US. So when that happened, obviously, the hedge funds that had massive leverage positions in copper long got margin calls, flamethrower to the face, and that's why the copper price completely collapsed. That's why some other commodities like silver, for example, are down today a lot. Because when this happens, then these hedge funds have to liquidate everything they can find. That's why when you have a crash in the markets, like 2007, 2008, for example, or 99, 2000, gold usually goes down in the beginning as well, because people are selling everything to get some money. And then gold usually rebounds after that and then goes up a lot. But we're going back to copper. So this is what's happening. So what does that mean? It means we have an artificial situation in the copper market. This has nothing to do with the fundamental situation of copper. Look at it. It doesn't even make sense. Look how far below we are with the copper price compared to where copper was before Trump announced the 50% tariff on copper products, not on copper. Probably should have clarified that. Would have saved a lot of hedge funds their whole year. No bonuses for these guys this year. That's pretty sure. So we actually had decent GDP data from the US. It makes no sense that the copper price is basically 12% lower now than it was at the beginning of July before Trump announced the tariffs. That's only because it's artificial. Now that gives us interesting chances because we know, and we've seen this in nickel, right? And let me show you the nickel chart. There you see it, right? See this blow up? This was the hedge fund that got completely blown up on the nickel short. But as you can also see, we pretty much went back to normal developments in the nickel prices, right? We were down here, Hedge fund blows up, all right, needs to shake out a little bit, but then as you guys can see, we basically came back to the normal development in the nickel price. So I expect the same to happen with copper, which obviously gives us interesting trading opportunities. The only question is, how deep can copper go? And that's the problem. Since this is an artificial event, it's a financial event. It's not an economic reasoning for this. We don't know. We don't know how many leveraged long positions in copper are still in some of the books. Maybe copper goes down another 24%. Unlikely, but possible. Maybe what we saw today was the final sell-off, and now everything is clear. On the technical level, you see the orange circle here. We got double support at the gap fill, the blue line, and the long-term lower end of the long-term uptrend channel that has been in place since 2022 and has been tested successfully several times, as you can see here. But who knows how low copper will go? So would I buy copper right now? I would not. And I would advise against it because you can get caught really bad. And the tendency is that people, after these type of sell-offs, get into the opposite, into positions with the opposite direction. So in this case, copper long with really, really risky option trades or leveraged to make the most out of the rebound. And you can get caught on the wrong side because you cannot predict. Right? You cannot predict how low this price is going to go. Or maybe this was it. So where do I look right now? I look at the copper companies. Why? Well, for them, this two-day event, not great, right? But if we assume that the same thing is going to happen to copper that happened to nickel, because in both cases it was an artificial event, then business going to go back to normal really quickly for the copper companies, and they're going to make a lot of money. So that's where the chance is. And next week, I will present to you a copper company, Explorer, in the US. That's one of the hot explorers for copper. Copper made in the US, as you know, is my favorite copper story by far. So you can also look at Freeport Mac, some of the big copper plays. And if we see a bigger sell-off in these stocks, then that could be a good buying opportunity. The worst thing right now is to throw up your hands and be like, this is terrible, something is going on. I need to be out of the copper market, I need to be out of the commodity market. No, this was a leverage, this was a margin call, this was an artificial event. It has nothing to do with the copper prices. I am pretty positive in a few weeks, we'll look back at the copper price and everything will look like it did before. And this is just a glitch that we're going to talk about, how a bunch of hedge funds got blown up. The same we did with nickel. That's it for today. Again, video coming this weekend. We're going to look at the monthly charts. We're going to talk about the commodity sector, what's going on. It's tricky. I understand that. It's tricky right now because we have different reasons why different commodities are taking a breather right now. And there's not one overshadowing reason. Maybe a little bit the dollar, but that's it. For example, copper, as you see here, right? We had an artificial margin call, blow up, and we have different reasons for it and different reasons for gold. We're going to talk about this weekend. Next week, we're going to have the Copper Explorer that I'm going to present to you. That could be interesting for some of you. I really like the story. Not a shareholder yet. Looking at it though. And if you haven't subscribed, hit the subscribe button because you do not want to miss this weekend's video on the commodity sector and next week's presentation. Have a great weekend. Talk to you later. Bye-bye.